Craig, what's up, buddy?
What's up, Brad?
How was your Thanksgiving?
It was awesome. Good food, and it's right down the street.
Awesome, man. Yeah, I love when I have an excuse to eat. You know, my nutritionist has got me strict for the last year. I made it through the first year, man. Stayed pretty consistent with it. I know you've been pretty strong with your keto, so it's tough,
Yeah,
man.
man.
But good. All right. Well, listen. Hey, everybody. Hopefully, everyone's having a great day. As you know, we're here to provide advice, ideas, tips, just about the mortgage process. Today, we are going to discuss the 203K renovation loan. It's a FHA product. We get a lot of questions about this type of loan, especially in the current state of the real estate market. There's not a lot of inventory. There's a lot of homes being overlooked. So this is a great product to essentially buy pretty much anything on the market. You know, turn a lack of better words, a piece of crap into your dream home. All right. So today we're going to discuss this. I just want to preface this with the fact that there are two different types of renovation loans. There's the FHA 203K, and then there's a conventional version called the Fannie Mae Home Style. The major difference is the fact that one's an FHA loan, one's a conventional. For those of you that know the differences between the two, most people will agree that conventional is a more attractive product. But the biggest difference with these type of products is that the Fannie Mae Home Style loan is going to let you acquire renovation funds to purchase or refinance a primary home, a second home, or an investment property. Unfortunately, we don't have time to discuss both products. So today we're going to talk specifically about the FHA product, which can only be used to purchase a primary residence. There's a lot of information we're going to share today. We're going to try to get through it in a half hour. And then we'll leave the Fannie Mae Home Style product for next week. We'll be discussing that on next week's live. So, Craig, I guess to get started, let's talk about why using a renovation loan is beneficial. You want to go over some key points?
Yeah, I feel like there's a lack of inventory, as we know, in this market. And how do you have the upper hand as a buyer? Maybe there's properties that are out there that need a little bit of work, and you're overlooking those properties simply because maybe you feel like it's not up to your standards, or possibly you might not be able to get a traditional loan, in a sense, to purchase that property. A lot of loan types require that the property meets certain integrity guidelines. This loan allows you to close on the loan in its existing condition and have the work done later. So it allows you to be looking at other properties, in a sense, where normally you might be overlooking those properties. Another good point is, even in this market, typically properties that need work are undervalued, or maybe being sold for a lesser price. Properties that are as is, sometimes, you might not be able to get a traditional loan on an as is property. It might require certain inspections, like a well or a septic, and that septic or well might fail the test. So having this type of financing allows you to think outside of the box, so to speak, so that you might be able to get a loan to purchase it in its current condition and address those issues after settlement. So it's really good for that purpose. I don't know if you have some other things that you want to add to that, Brad, as far as why this might be a beneficial product.
Yeah, I mean, I think the biggest thing is the lack of inventory. We have to get creative. We have to make all homes appealing, right? And I mean, let's face it, like, unless you're buying brand new construction and you're having a house built, I think we'll all agree that we buy a house and it still never meets our requirements, for what we want. Like, I constantly talk to people who are, installing hardwood floors, or, fixing up the landscaping, or fixing a pool, or putting a new roof on. Like, there's so many things that need to be done regardless of the condition of a home. I think it's just a great product to really turn a house into a home, right? The other thing is, like, because we're going to talk briefly about refinancing and how you can use it. when refinancing a home. I mean, we do have increased equity positions, right, with the current housing market. However, there's still people out there that don't have the 20% equity position that's going to allow them to take cash out to make renovations. So in the case that you're doing a refinance on a home, or in the case that you want to make renovations to a home, you might not have enough equity to do a home equity loan or a cash out refinance to obtain the funds to make the renovation. So this is a great product to do that, because you can go up to a maximum financing of 97.75%, which we'll get into. But that's a lot less equity needed to do this type of loan, opposed to having the 20%, your traditional cash out.
It's a super awesome point, because typically, if you think of doing something like a project for renovations, you're talking about a cash out refinance, and cash out refinances are limited to 80% of the value of your home. Whereas this particular loan is allowing you to go way above what normal cash out scenarios would allow you to have cash in your hand. So if I'm thinking to myself, hey, I can only go up to 80% of the value of my home, I want a check in my hand to do the renovations myself. If you do this type of loan, you're talking about you only need a minimal amount of equity to include renovations. So it gives you that like thinking outside of the box mentality, like, okay, maybe this loan is right for me, and I can, include these costs that normally I would think I would have to get a check in my hand at settlement, and only go up to 80% of the value of the house.
Cool. Yeah, I agree, man. So a lot of good reasons that the renovation loan could be beneficial. I mean, outside of the typical reason just to get renovations done, right? So why don't we discuss the basics on, how this type of loan works? Maybe we could start with the amount of financing that you can obtain. Let's start with a purchase, for instance.
In regards to the purchase, the typical general idea is that you're able to get up to 96.5% of the total acquisition cost. So that means that you have to contribute 3.5% down payment of the total acquisition cost. And what is total
plus 96.5% of total acquisition plus renovations?
I'm sorry. Well, total acquisition costs, and that's what I was going to describe, is what does that consist of? That consists of the purchase price plus total rehab costs. That's when I'm saying total acquisition, I mean that. So if you're taking, let's just say for an example, $100,000 purchase price and the total rehab costs are $50,000, the total acquisition cost is $150,000. We would give you 96.5% of that $150,000. Now there are different formulas that are used, and I want to make sure people understand those formulas. And typically when we're talking about purchasing, we're looking at the purchase of the house itself plus the total rehab cost is 96.5% financing. And then, okay, if the house doesn't appraise, let's say it doesn't appraise, you also have some wiggle room, because they'll allow you to go up to 110% of the after improved value. So if you take 110% of the after improved value, that's a number. And if you take the sales price plus the rehab cost, that's a number. They'll allow 90 to 96.5% of the lesser of those two numbers. So sometimes a house may not appraise, and you do have a little bit of wiggle room. If it doesn't appraise, you can go up to 110% of the after improved value. So it's whatever is less of those two numbers, essentially.
Agreed. So yeah, because a lot of times when you make renovations to a home, you're not going to get dollar for dollar, right? I mean, obviously in this market right now, people are busy, and contractors are charging more for the work that they're doing. Price of materials is higher, and some things that you're going to do to the house it's not going to reflect in the value dollar for dollar, like I said. So to kind of just break that down really quick, if you're buying a $100,000 house and you're putting $50,000 in overall renovations and costs, you're at $150,000, like you said, right? Well, the reality is that house might only end up appraising for $140,000, because you're not going to get dollar for dollar. In that case, 110% of 140 is 154. So that's high enough to cover the total acquisition plus renovation. So in that case, you're going to get the 96.5%, which is going to require a down payment of $5,250. So essentially, you could buy a $100,000 house, make $50,000 in improvements, and only come out of pocket for your down payment of $5,250, plus any of your, typical closing costs, title fees, lender fees, setting up your escrow. So it's a pretty great product to purchase a home. Now, the refinance works slightly different, and it's basically going to be the total amount of your payoff. So whatever you owe on your existing loan, plus settlement fees and your total renovation costs, that's going to determine your base loan amount, right? And then to determine if we can fund that full amount, we're going to look at two formulas. We're going to take the lesser of the as-is value plus your total renovation costs, or 110% of the after completed value. Whichever is lesser of those two numbers, we're going to finance up to 97.75% of it. So as long as one of those 97.75% covers one of those two formulas, then it's going to fund the entire renovation and paying off your existing mortgage. So this is a lot of numbers, formulas. It can get confusing. And I mean, we've been doing this. I've been doing it for 12 years. Craig's been doing it for almost 20. And just explaining it, like if it's on paper and we're figuring it out, it's very easy. But kind of explaining these numbers can sometimes get confusing to us, like almost like a tongue twister in a way. So
the good thing is, Brad, just to let you know, we have calculators that do this stuff. So it's like explaining long division. But in essence, the reality is that with a refinance, a lot of people don't realize you're not. The intention is if you have a little bit of equity in your house, you probably don't have to come to settlement for any of this, and can go up to a large percentage of the value of your home to be able to accommodate covering renovation costs, settlement fees, and all that. And the only thing that you would really have to pay for, would be inspection costs, right? An appraisal, or if there's other inspections required. So that would be your only out-of-pocket cost. So the refinance is a very good tool, or the 203K refinance is a really good tool to get renovations done without being limited to that cash out option.
Yeah, dude, it's great. I mean, we've helped so many people over the years. We have to do at least one of these a month, and we've been doing loans for over a decade, even longer for you, Craig, almost 2 decades now, since before you started losing your hair.
All right, I had rock star hair before this.
All right, so we kind of like determine what sets the loan amount, right? There's 2 different types of 203K loans. There's a streamline and there's a full standard renovation 203K loan. The difference is really comes down to, and in a nutshell, I mean, there's different repairs that are allowed, but with the streamline 203K loan, it's essentially, it's a full cosmetic rehab. So it can't be structural. You can't be doing major structural renovations when doing a 203K streamline. And then the total renovations plus renovation costs can't exceed $35,000. That's typically the requirement to stay within that streamline. Once you move to a full standard, the major difference is that it's going to be required that you have a HUD consultant involved. And typically when doing a streamline, you're going to only have 2 draws. In some cases, you can get a draw at settlement. I think they typically require that you have permits obtained or applied for to get a draw at settlement. And then you'll get an additional draw later. With a full 203 or with a full standard 203K standard, you're going to have a HUD consultant involved, like I said, and they're almost like a project manager because it's typically a larger project. The renovation costs are higher. Maybe structural rehabs are being done. And in that case, you have this project manager that's doing feasibility studies. He's basically like your liaison between the bank and with the contractor. So it's actually not a bad thing to have this person involved, right? The other thing is that because it's like, I know somebody, Mark, he did like, I don't know, $100,000 worth of rehabs, right? And there was different phases of the project. So he got multiple draws throughout the process. So every time the next phase was done, he was getting a draw, right? So we're going to help determine which 203K loan you're going to apply for. But, just the simple explanation is that you're doing a streamline. There's no consultant involved. There's a minimal amount of draws. The work is cosmetic in nature, and there's no structural repairs being done. Is there anything I missed there or that you want to add to that, Craig?
No, I mean, I feel like the basics, so people understand why is a streamline more beneficial than a standard, because number one, it's less out-of-pocket expense, right? Because you're not paying that consultant up front. And sometimes with projects that include maybe an addition to a home or adding a bathroom or, doing some major structural work to a property, you can, if the renovation costs or the labor and materials are, 50,000, 75,000, that consultant might charge up to $1,200, somewhere in that range, $800 to $1,200. That's a pretty hefty expense. Whereas if you're doing minor cosmetic repairs to a property, appliances, and we'll get to, some eligible repairs later on in the in this presentation, but you don't have to pay that consultant fee, number one, and your total costs, we call them soft costs, are going to be less because you don't have as many draws, right? You're only going to have an initial draw and a final draw in a sense. So once the work is completed, you're not paying per inspection, and each inspection costs money once they're going to review the work that's done by the contractor. I want to touch base on, something that we didn't go over, which is talking about the cost, right? The total acquisition cost.
I was on the same.
Because I feel like this is important to understand what's involved with the cost of doing a renovation loan, right? So we talked a little bit about total acquisition. What does that mean? Purchase price plus total renovation cost. And what are your total renovation costs? It's not just what's put on the estimate from your contractor, right? It's labor plus materials, right? So that's your estimate. But there's also what we call soft costs. So total renovation costs or rehab costs consist of hard costs and soft costs. The hard costs are what we said, labor and materials. The soft costs are costs associated for doing the financing, right? So what are some of these soft costs? You have a contingency reserve fee. Every renovation loan is going to require a buffer amount, right? An amount that's set aside in case there is more money needed to complete the project, right? So if it's a large project, they're going to require a larger contingency reserve. And it works basically anywhere from 10% to 20% of the total rehabilitation costs. So if you're doing a larger project, you're probably better off doing a higher reserve amount. But I feel like the minimum would be 15% for streamline 203Ks. I believe you can go as low as 10%.
Yeah, I think a lot of times they're increasing it, like depending on like utilities, like things that they know right off the bat are going to create unforeseen circumstances.
Right.
So
and the good thing is that we determine all this when we get the estimate and figure out, how much reserves do you actually need. But this is that buffer amount aids you after settlement in case there's more money needed to complete the project, right? You can't go back to the well. That's the point. And you can't go back and get more money after the loan is closed. So this reserve account is set aside in case more money is needed. You have your reinspection fees. Those are the costs for the inspection from either the consultant for the full standard 203K or the appraiser in the case of a streamlined refinance. So each inspection costs a certain amount of money, up to sometimes I feel like $275, $250. So a larger project is going to have up to 5 inspections. That can get costly. A smaller project, cosmetic in nature, only 2, right? The streamlined refinance. Every time there's an inspection done or money dispersed, you have title update fees or title bring down fees, right? So for each inspection, there's an equal number of title updates. I believe they're up to about $150 or so. you have what we call supplemental origination costs or construction management fee. This is the cost for the servicing lender to hold and manage the project to disperse money. So there's a cost involved, and I believe it's $350 or 1.5% of the total rehab cost, whichever is greater. And then the additional fees, some of these are going to be fees that you pay out of pocket, but you can be reimbursed for these fees that you pay out of pocket as a part of the financing at settlement, right? And this is for any type of loan. It doesn't matter if it's a standard 203K or a streamlined 203K. That's the consultant fee, right? And that ranges anywhere. I've seen them as, as low as 600, and I've seen them as high as 1,700. Permits, right? You're going to want to make sure that you line up permits properly. Whatever work's being done, each township is different. You want to find out those costs. Your contractor would know that information. And if you're doing a larger project, most of the time you're going to need plans and specs. An architect or an engineer is going to cost you money. And these are not inexpensive things. So you want to, if you have the ability to cover that cost, some of these, individuals want to get paid their money in advance. In the background that you're going to be able to get reimbursed that money as a part of financing that for the soft costs. So those are some of the fees that are included with the soft costs. But just in general, so everybody knows, it's not just what's listed on an estimate. There's other costs involved. Total rehab costs are hard costs plus soft costs, right? And then you have, okay, what's my financing based off of? Total acquisition, which is purchase price plus total renovation costs. So, I think we skipped over that part.
Cool. So I know you wanted to talk about the different eligible repairs. I think that's a big deal, but I actually put together a worksheet that kind of itemizes all of those. So we could probably spend an easy 20 minutes to 30 minutes just reading that or going over it, and especially the way we like to talk and make people's ears bleed. I don't want to get into that. So if you're watching this and you want to know what type of repairs are allowed on the 203K Streamline or the full standard 203K loan, just shoot one of us a direct message right here, and we'll be happy to share that with you. All right. So the cost that you went over, that's all helpful information, Craig, and obviously that can all be included in the financing.
So why don't you talk a little bit, Brad, about what happens after closing? Because people don't, the initial settlement, right? Before settlement, there's no work being done. It's kind of giving them an idea of what happens after settlement, right? We talked a little bit about it, but what's going on after settlement?
Yeah, I mean, the main thing is that I've seen it happen two ways. I've seen us disperse money initially at settlement, and I've seen it where we don't. And that really comes down to having permits. So a lot of times, like with a refinance, if you're going to have permits because you own the house, it's a lot easier to get permits on a house that you own opposed to one that you don't own, right? So, and we're going to hold the loan for a little bit. We have work that we do on the back end before we can prepare it to sell to the investor or the servicer, essentially the bank that's going to manage the 203K account. So a lot of times there is a little bit of a buffer room where if you buy the house, you have in some cases enough time to go and apply for the permits and send them to us. And then we can notify our post-closing department and they can cut a check in some cases. But essentially when you close, depending on permits in most cases, that's going to determine if you get a draw right away. I typically tell people to find the right contractor. And we haven't brought that up, and that I think is a popular question. Does the contractor need to be on an approved list? No, not necessarily. They don't. They do go through like an onboarding phase. We're going to require a lot of different documents from the contractor that they're going to have to sign, copy or proof of their license, proof of insurance, because we want to make sure that they're licensed and insured to do business in the state that you're buying the house in. But there's also other documents that we're going to need outside of the actual proposal and things of that nature. We're going to need almost, in a sense, it's called a resume, right? We're going to actually call some of the past clients that they've done work for just to validate that they are a good contractor and that they're going to do the work that they're agreeing to. Because at the end of the day, the bank wants to make sure that this loan is going to perform. And if the work doesn't get done and the house isn't habitable, then it's not going to perform. So we're going to do a little bit of our own, validating on our end to make sure your contractor is, at par or above par.
Well, look, I'll add to that, and I skipped the section I wanted to go over first, but since we're already talking about, hiring a contractor, I feel like there's some best practices with any renovation loan. And the first thing I would do, whether you're looking to refinance or purchase, is to complete a loan application. I mean, you can get a good idea of anything, whether you qualify for an FHA loan in general, right? I mean, that's the important part is, do you qualify for FHA financing? Because that's all a 203K loan is an FHA loan. And figuring out numbers and giving hypotheticals is easy on our part, because all we have to do is essentially figure out what an estimated total acquisition cost is and kind of give you an idea of whether you qualify for that type of financing. So that's the first part, is kind of getting started with a lender and completing an application. The second is the most important part, and that's interviewing contractors. I feel like people don't do this often, and this is what causes problems when, in my experience, causes problems and delays in a renovation loan process. So some of the things that I would look for when hiring a contractor is, when you're interviewing these people, look to see how they're communicating with you. Do they call you right back? Are they very responsive? Because most likely, if in the beginning you're not getting good responses, it's probably an indication that they're not going to be a good fit for you and not communicate well during the process, because there's a lot of people involved with a renovation loan, and having good communication is important with a contractor. Experience with this type of work. I mean, I feel like people that good contractors, are some good contractors, I would say most good contractors have some experience with these types of loans, right? And ask them that question. If they've had experience with renovation products, that's important, right? So you're not dealing with somebody that's kind of wet behind the ears, so to speak, and has never done a project like this, because then they might have some idea of documents that they have to prepare. How does an estimate have to be prepared? What they're expecting at settlement, right? For bigger projects, do they have liquidity to start?
That's what I was going to say, actually, when I was mentioning that about finding the right contractor is the actual, like, you don't want to hire like Joey fixer upper down the street, right? That doesn't have any credit lines. You want to hire a contractor that, like you said, has liquidity, has credit lines where they are, and they do have the ability to start a project without a draw, and like you said, the previous point, that they're familiar with it because they understand, they trust that they're going to get the money, and they're willing to start the process and start paying for materials if need be, because they know how this loan works and that they're going to get the loan and or the money, and that everything's guaranteed by the bank. So I just want to add that to what you were saying.
I feel like patience is important attribute of a good contractor. Sometimes they can be frustrated individuals. I mean, if you've ever worked with a contractor before, sometimes they can lose patience because it can be a longer process, or they have to revise estimates. Indicating, it's hard to figure out whether somebody's patient or not until you actually go through working with them. But the way that you kind of figure out if somebody's patient is talk to family and friends that use people and like their work and like how they worked with them. I feel like that's how you're going to understand whether somebody has good attributes or whether they're patient or not. One of the other things too is organization with paperwork. If you're getting estimates and it's written on a napkin and it's not broken down properly, or you're getting things that don't kind of line up with what you talked about, you probably don't want to continue using that person, because it's not that they might not do a good job, because I know that not all contractors are going to be very good at doing paperwork. They're good at their craft. But I feel like if you can find somebody that is organized and can send you very accurate estimates, and it looks organized on their paperwork, then that's a good sign that for the use of this particular loan, that they're probably going to have that same type of attitude and philosophy with other paperwork that's required for them to complete. So interviewing a contractor is super important. And the next part to that, and kind of best practices, is review the properties with your contractor. If you're in the market to look for a house that needs a little bit of work, have them walk through the property with you and your real estate agent so that they can get a good idea of what would need to be done. Now, there's certain things that are required by FHA to be done, right? And there's certain things that you might want to have done but are not required, right? It's not required by FHA for you to put in a new refrigerator or paint the living room a different color. It is required, though, that you have handrails on steps leading in and out of the property. So kind of understand two things: is understand, your real estate agent, a good real estate agent, is going to understand what things are necessary and what things are optional. And this kind of will give you a good idea. Okay, if I don't qualify for as much money, maybe we can remove some items from the optional list versus the required list, so to speak. But walking through the property and getting a good idea or an estimate of what repairs need to be done, it helps us to be able to give you an idea of what the financing is going to be for that scenario pretty accurately.
Yeah, and that's kind of what, in the past, I mean, that's a good thing about having a HUD consultant involved. A lot of times they'll work directly with the contractor to make sure that they're addressing everything even before an appraiser goes out there, because they know upfront like what type of repairs are going to be required.
No, and the only reason I say that, it's a great point that HUD consultant, that's the very good reason to have a HUD consultant. But a lot of times we're talking about people that are just pre-approved on the street looking, right? They're not spending any money yet. They haven't hired a consultant, so to speak. It's just kind of getting an idea of, if you're looking at a specific scenario, what's the estimated cost, right? And walking through with a contractor is going to give you a better feedback than you walking through that might not have any experience, right? And just kind of ballparking a number, because you can be clearly off on that number and you don't want to be. You want to be as accurate as possible. So that's kind of some of the best practices. And I one of the other things I wanted to touch base on, Brad, because you had mentioned about getting reimbursed draws at settlement. So there's a difference between getting draws at settlement between the streamline 203K and the full standard. And the streamline it's a very good situation because you can get up to 50% of the labor and materials at settlement. Now you're going to have to get permits issued first. And some townships don't require permits for small cosmetic stuff, right? I mean, you could be buying a house in a township that doesn't require permits to do certain work. And it might be that you're just doing minor cosmetic renovations. In that case, you would just need something in writing from the contractor in the township saying that there's no permits required for this work. We have you fill out that form, and it's easy to get the 50%. Even if we can't, at settlement, get the 50% check written out to you and the contractor, we have some time, like you said, Brad, to hold on to that loan. You have ownership of the property, you get the permits from the township, you issue us the permits, then we can release the 50% so that the contractor can start work. I mean, the bottom line is this, is that nobody should be doing any work on the property, right, if it's not allowed by the township. So there's no reason for a contractor or yourself to be worried, in a sense, or start work early until you have the necessary requirements met by the township. So that's one thing. The other thing would be the standard 203K. This is a little bit trickier for bigger projects because you're not allowed 50% of the labor and materials. Only if, I believe, from what I've reviewed, if you're a contractor and you paid for items in advance and you have invoices and you have documentation to support what you've paid for in advance, then at that point you can get 50% of the work that you paid for in advance. So in my experience, that doesn't happen a lot because most of the time a contractor doesn't want to pay for those things in advance. If they have orders already and they can provide documentation of what was paid in advance, then you can get up to 50% of those items paid in advance. I don't know if you had anything to.
Yeah, I think the only thing I have a question about, and I could be thinking wrong, or one of us could be wrong, which, we've been doing this for so long, we've retained so much information.
We're constantly looking up.
So. I think the 50% might be 50% of the labor. I don't know if it's the labor and materials, but I could be wrong about that. Maybe something changed. I'm not really sure, but we could check for you guys if you.
Or it could be vice versa. It could be just materials. So.
Yeah, that's what I meant. 50% of materials. Yeah. I said labor. I meant to say materials. So I think that's what it is because.
I agree. And, I feel like that would make more sense to me that 50% of the materials can be reimbursed. But like I said, the reason why we don't know that commonly is because it doesn't happen. We very rarely have that situation occur. So
here's the one thing I do want to add off topic, but still on topic, is that you had mentioned, obviously, it's important, guys, to find a contractor that's organized, but it's also just as important or more important to find a contractor that's really good at swinging the hammer. And Craig will agree, in our business, processors are typically more organized than us, right? Because that's not what we do, right? So just like contractors, their office, their back office might be more organized than them. And some contractors don't have a back office. So the other important thing is, obviously find somebody that's licensed and able to do the work and that's good, has good craftsmanship, but pick the right lender too, because I would say 9 out of 10 203Ks that we do, we get involved and we help the contractor, because most of the time we are getting a proposal on a Microsoft Word document and it's just a blurb like, okay, kitchen, 20 grand. And the one thing that we know, because we've been doing this for long enough and we've done so many of these loans, that the underwriters actually want it broken down. Like the banks want it broken down, materials versus labor. So that you have to actually be very specific on your proposal and break the entire thing down. So there's times where I've interviewed the contractor and went and spent 20 minutes with them over the phone and said, look, let's figure this out, and kind of help them through writing the proposal. In some cases, I wrote the proposal for them and sent it back to them and said, listen, here's an updated proposal on what you sent me. If you agree to it, copy this, put it on your Word doc, your Word document with your header, so that way it's broken down. So that's another thing, is finding a lender that's proactive, that understands this process is good and is going to be just as helpful during the process, because contractors, we can't tell you who to pick as a contractor. For one reason, I don't want to, because the last thing I want is you calling us complaining about the contractor that we recommended you to, right? So I just wanted to add that. I think us picking the right lender is just as important.
Yeah, so I would agree with everything you said, and I think that it's important that the main focus is that they do good work, what they're supposed to do. Are they able to do the renovations that you want in a timely fashion and up to your standards? That's important. And like I said before, it's a lot of times finding those individuals, right? It's word of mouth. It's not so much the internet, or if it is the internet, you're looking at reviews, you're doing your research. But to me, if I'm looking for somebody that does certain types of work that's involved with the renovation costs that I want to have done to my house, I'm talking to somebody that I know. I'm reaching out to, hey, I know you just had this done to your house. Who did you use? Great. Let me give them a call and then start your interview process. So I feel like all the things that we're mentioning is just trying to give you some helpful feedback with regards to how to select a contractor. We're not telling you this is a must thing you have to do. Just in our experience, when we've gone through this loan, what has led to, a more smooth transition, or a transaction, I should say.
Yeah. So, and I will say, if you're looking to buy a house in Philly, Fishtown Frank's the man. I will personally recommend Frankie, because he does awesome.
Plug for Frankie.
Yeah, they got to do that shameless plug for my man. All right, cool. I think we touched on a lot of things today. I mean, I don't want to overwhelm you guys with information because it's this is actually a fun process. Like talking about all this stuff, it might seem stressful, ridden with anxiety, but it's really not. We do all the work for you, and that's what I said on my last point: is pick the right lender. We're very familiar with this process, as you probably gathered so far. Craig is highly intelligent. He understands loans very much, and you're in good hands. So if there's anything we could do for you guys, regardless, 203K or any other type of loan for that matter, feel free to reach out to us. There's some links provided where you can start the process of, doing a refinance review or getting qualified to purchase a home. If anybody's watching this video and you think that it can be helpful to a friend or a family member or a coworker, feel free to tag them in this or share the video with them. Craig, you have anything to say before we?
I feel like this is an awesome product. I feel like more people should take advantage of it. I feel like a lot of our referral partners in the industry don't know how this might be able to help them and their clients. So, and I feel like we'll see more of this in the later months, coming in the future, just because I feel like there's a lack of inventory at the moment, and that's a cause for having less of these loans just because of time frames that this normally takes. But I feel like this is an awesome product, and we're here to help you out and go over the details of this product if you decide to apply with us, or you just want to have some basic information. So me and Brad both are very familiar with this product, and we're looking to help anybody, our people that are looking and interested in borrowing money using this product, or any of our referral partners that want to know more information about it to give to pass on to their clients.
Yeah, and I mean that's the other thing too. Just one last thing I wanted to add. You got to think to yourself: is the house that you're living in, or the house you want to buy, COVID proof, right? And I hate to bring that up, but like we've all learned that, that whole 6 months, a year, however long, some people are still working from home, does your home have your personal gym? Does your home have an office? Does your home have, the outside atmosphere that you get when you go out to a restaurant or a bar or a vacation? So a lot of people are upgrading their homes to have all of that stuff so that you really don't have to leave as much, or you have your, you can vacation at home, whatever the case is. And I'm not saying be scared to go out there and have fun and meet people and stuff like that. But just, think about that. Like there's a lot of different things you could do with the renovation loan. Me personally, I would love to have a nice home office, which I did, but now with the new baby coming, it's not going to be an office anymore. So
it's called buy another house.
Yeah, I might have to renovate that basement. It's gonna be a gym and an office.
Yeah.
But all right, cool, man. Hey, Craig, thanks for all the helpful information here. For those of you that joined us, thank you. We appreciate you. And we'll be doing this again next week. Next week, it's not going to be as long because it's a very similar topic. We're just going to touch on the Fannie Mae home style renovation loan and how that can be used to purchase or refinance a primary home, a second or vacation home, as they call it, or an investment property. You don't have to wait until next week. If you have an interest in renovating one of these type of homes, feel free to reach out to us.
Cool. Thanks, guys. I appreciate it.
Have a great day. See you then.